This is definitely the most important video you must watch if you want to be successful in trading. At the end of this video, you will become a master at reading Japanese candlesticks, no BS. I will give you my own personal favorite methods that I've been using for the last 10 years. This Japanese candlestick course is suitable for beginner and advanced traders. Beginners will finally understand what a candlestick is and how to apply it in your charts correctly, while the advanced traders will likely find a lot of my strategies useful to improving their trading style. And I've split this video into 3 important parts: the basics of candlesticks, my top 5 candlesticks and how to use them, and trading strategies to apply with the candlesticks to make perfect trading setups. So without further ado, let's just start our ultimate candlestick course. So a candlestick is a visual representation of price movement, whether you're trading Forex, stocks or crypto. The most important thing in the candlestick is the body. We have a green body just over here. It represents a lot of bullish pressure, which means people are buying a lot more than selling and the price is increasing in value. And vice versa, if we see a red candlestick, it simply means that the price is currently dropping down and there's simply a lot more sellers than buyers in the market. We also need to understand candlestick wicks, which can be represented just over here. They're basically like a little tail for the candlestick and they simply represent the high and the low zone of the candlesticks. Absolutely the same thing can be seen on this bearish candlestick or the selling candlestick. It simply means that was the high over here, that's the low over here. Very simple, just a candlestick kind of shadow where he has been but no longer is. And then one of the most important things, we have the opening and the closing prices. Well, the bullish candlestick will open from the bottom usually, and if it decides to increase in value, as we can see over here, it will turn green and continue moving towards the upside like this before it reaches the top, and it could actually be a full candlestick that is super green, or it's gonna have a slight rejection or that kind of shadow wick and close a little bit lower, in this case just over here. And vice versa, the bearish candlestick actually opens at the top, as we can see over here, and if the sellers are pushing the market down, as we can see over here, the candlestick body is gonna increase and kind of continue moving down. You know, the full body could have been just over here, but we did have some form of retracement, let's say, very slight, and then we had a nice little closure over here. So again, this opening and closing happened, let's say if we're trading the 1 hour time frame, within an hour. It started over here, it pushed towards the downside and closed over here, but the lowest point was where the candlestick wick is. Same thing is happening over here. Between the 1 hour, the candlestick wick at the top was the highest point, the candlestick wick at the bottom was the lowest point. The candlestick appeared and started just over here, pushed the market up and closed within the 1 hour time frame just around this area zone. Okay, moving on now to candlestick pressure, what it is, what it's used for. So the main 2 candlestick pressures are what? The selling pressure and the buying pressure. So if we take a look at the selling candlestick over here, what can we see? What's so significant? That's right, the long upper shadow, right? Look at the size of this shadow. It's massive and it signifies a lot of selling pressure. At one point, this candlestick was green. It pushed the market towards the upside, but what happened? After it reached the top over here, selling pressure came through, so sellers entered the market and pushed the market back down heavily, and we closed off as a red candlestick. Now in theory, the previous candlestick was probably green, something like this, which means the green candlestick closure was over here, so C for close, and this was the opening of the candlestick, so O for open. Again, the market pushed towards the upside, the candlestick was green, so it started pushing down heavily, and that's why we see this red color appearing, because it showed that the previous candlestick bullish pressure is no longer here and the market is actually dropping down. The maximum drop was over here, the bottom of the shadow, but there were some buying pressure, so some buyers are over here, but not a lot. So it started buying, and as we can see, we ended up with this small kind of red candlestick. But overall, this selling pressure over here that we see is much bigger and much more impactful than this little rejection that we have for buying. So at the moment, there's a lot of selling pressure, so you should consider selling rather than buying. Okay, now let's take a look at a buying candle. Why is this a buying candle? Well, we can see that the long lower shadow over here is massive. That's the buying pressure. Push the market towards the upside and actually closed higher than the previous candlestick. So let's say the previous candlestick was something like this. That's where the market closed, right? So C for closure. So this is the zone where it opens. So O for opening. The market pushed down heavily. At one point, this was a huge red bearish candlestick, but once it reached this area zone, buyers took over and pushed the market back up. And not only did they push back up to the previous opening, they pushed actually much higher. This is where the actual candlestick closed for the buyers. So C over here for closure, and that was the buyer's high. So this was the previous high for the buyers as well. So let's take a look at an example from real-time charts and let's see how we can use this information that we just learned in real-time markets. So the lines over here are simple support and resistance lines. Typically they're great for buying and selling, and as we can see, we found our first area of rejection very clear just over here. Can you tell me why is it rejected? Clearly because previously these two candlesticks kind of stopped in this area. This wick rejection, or the lower shadow, let's say, is a clear indication that this area of support is very strong, and you could have potentially bought this trade of this area zone or waited for a nice combination of these two candlesticks, which we'll discuss later on, entered the trade and the market kind of pushed towards the upside, making new higher highs. We can actually spot the same examples for the resistance. As you can see, this candlestick wick, what is it telling us? There was an attempt for a lot of buying pressure over here. It pushed towards the upside till this area zone, but where did it close? Just around this area zone. So it shows a lot of sellers are in this zone. So sellers are here. This area zone is showing that there's a lot of buyers. Again, look, resistance area zone previously respected over here. Resistance, nice upper shadow over here. What does it suggest? That there's a lot of selling pressure and it pushed towards the downside after this candlestick closure. So again, a lot of sellers here. It's also important to note that even though the selling pressure was over here, there were some sellers and actually closed as a red candlestick. With the candlestick wick size is at least half as big as the candlestick body, it's a good sign that there's going to be a lot of buying pressure over here. So buyers push the market up. Okay, now let's understand some extremes. This candlestick on the left does not have any wicks or upper shadows, lower shadows. It simply is a block with a body. What does this signify? It's a lot of buying pressure. It's strong bullish pressure. So it's strong candle, right? Yet the one on the right just over here pretty much has only upper and lower shadows. It simply has shadows everywhere, and the opening and closing price is pretty much in the same space. It even has a name, it's called the doji. It pretty much means in that candlestick there's a tug of war. Buyers are pushing on one side, sellers are pushing to the other, and the candlestick body is not moving anywhere. It's waiting until one of the teams win. Vice versa, this candlestick where it's clearly buyers are definitely pulling the market towards the upside and definitely winning. We cannot see any form of selling pressure even by the wicks. There's no wicks, there's no selling pressure. So again, very strong, yes, no strength over here, nothing is happening. The left candlestick could also be red, it's the same direction, no wick. There's a lot of sellers in this case, then is continuing down. It's likely trending towards the downside, especially if you see a couple of these candlesticks forming side by side. Okay, now let's take a look at the real chart and try to identify what we learned so far. So the first thing you would do is draw your area of resistance and trend. In this case, what do we see? We see couple of these dodgy candlesticks where, do you remember I told about tug of war is pushing towards the upside and the downside, telling us that it's indecisive. The market doesn't know what to do. After that, we did have a nice little trend just over here, and it pushed the market towards the upside. Now, we bounced off the resistance zone over here, and what happened? Look at the market momentum. We have broken the trend line just over here, so this has now been broken, and look how the market momentum has changed from small candlesticks over here to a big one to even a bigger one, showing a lot of bearish pressure and momentum. As I said, pretty much no wick even at the top over here, so it didn't even pull back a little bit and push the market back down. Look, a long lower shadow, right? Do you remember the long lower shadow does signify a lot of buying pressure, so it may be a buy, right? And what do you know what happens? The next candlestick is massively bullish and it continues moving up. Then we do have a rejection of here. Again, what happens? Goes down. Again, rejection of here, goes up, kind of like this, stuck in between these two area levels. Again, resistance and support over here, but then eventually just goes towards the upside. So that's the way you could identify and use the market. This is the most simplified way you can think of, but it does work. So what's the lesson over here? Well, the candlestick market momentum. As we can see, this is the main key point over here. It broke out our bullish trend over here. So bullish was buy, right? We were buying, it broke out, boom, it's going down. What do? We could have been selling over here, right? We are selling, we are dropping. What happens? We see this candlestick wick with a long lower shadow. So what does this signify? A lot of buying pressure. So maybe it could be a buy again. And what do you know? We see a nice little buy over here and it continues moving up. Understanding candlestick market momentum is crucial to your trading success. Imagine you continued selling over here. You would be losing money. So out of the two candlesticks, which one do you think has more momentum? The red one or the green one? The answer is the red one, because it's pretty much double the size of the green one, right? There was a lot more happening with the red candlestick over here than the green over here. So imagine this is the daily time frame. One candlestick of this represents 24 1-hour candlesticks, right? So what does this tell you? This tells you that this day over here on the daily time frame, right, was much more volatile than this day over here. This is the same daily time frame, yet there was twice less the movement than the red candlestick over here. Okay, now let's take a look at my top 5 candlestick patterns. Starting with the tweezer top, it's a simple 2 candlestick formation signifying a bearish reversal. You can usually spot this candlestick pattern on an uptrend. It's going towards the upside. The first candlestick is a strong bullish one, and the second candlestick is a red bearish one, signifying bearish pressure. The tweezer top also must have a nearly identical top level just over here, so the second candlestick has to be the same as the first one, or very similar. So maybe if there was a small wick over here, that would be substantial enough. So let's take a look at a real-time example on tradingview.com. As you can see, I would consider this to be a tweezer top, just because previously it was on a strong trend towards the upside. Our first bullish candlestick, or green candlestick in most cases, would be here, and our second candlestick is red, signifying there could be a potential reversal. The top of the bodies are pretty much in the same length. It's a great indication for a lot of selling pressure, and if you combine it with simple price actions such as support and resistance, you could potentially enter a trade just over here, and likely it will continue dropping down, and that could have been a simple 2 candlestick entry using the tweezer top. And vice versa, we have the tweezer bottom. Works the same way, just the opposite. To correctly identify a tweezer bottom, we once again want to have identical lows from the first bearish candlestick over here to the second bullish candlestick. So the tweezer bottom over here is a bullish reversal pattern. So once the market is trending towards the downside and see this type of price action, there's a good chance that the second candlestick will be bullish. And with a bit of luck in Forex, it actually will be, and it's gonna turn around and you're gonna start making a profit. Okay, going back to TradingView, let's identify the tweezer bottom. So again, to identify, what do we need? The trend has been bearish, right? The slight trend over here went towards the downside. We spotted a nice bearish candlestick and a nice blue candlestick over here. The two candlestick bodies are pretty much identical at the bottom, signifying that there is a loss of strength of this bearish momentum and bulls or the buyers are gonna take over. So spotting this already could be a good indication for further bullish pressure. Again, don't shy away from using clear support and resistance areas. Let's see what happens with this trade. So the first candlestick actually drops down, and that's okay. Sometimes a candlestick pattern is not 100% correct, and sometimes it's just gonna take a little time before it develops. So as you can see, it continues moving towards the upside. It actually bounced off this area of support, and since we spotted the tweezer bottom early, we did not shy away likely and not close off our trade, and that's why we kept it open, and it would have been a very profitable one. Okay, so this price action candlestick pattern is a little bit more difficult to remember and a little bit difficult to spot, but if you do remember it and understand how to trade it, it can be very, very profitable. So this is called a rising free methods pattern. The free methods is basically these three candlesticks over here. In the bullish scenario, we're gonna have the first bullish candlestick, and the three next candlesticks are going to be bearish. They're gonna be pretty much inside kind of this area zone over here. So imagine the first candlestick like the mother bar, these are the babies, and then the father kind of comes through and breaks out. And with that being said, you enter the trade over here on the father bar, let's say, and we are going towards the upside. And the same thing happens with the falling method. As we can see, a nice bearish candlestick. Let's imagine the mother bar over here, kind of inside these three little methods over here, and the father bar again kind of continues on with the trend. So strong bearish trend, slight bullish action, you know, trying to fight off the bears in this market, and then the bears come out victorious, making a new low as well. This is where your entry is. So kind of push exhaustion, as I say, push scenario over here. Okay, so let's take a look at the falling free methods in real-time markets. So we have our mother bar just over here, clearly is on a strong, you know, push towards the upside. The wick is currently outside, you know, the mother bar, but doesn't matter, the candlestick body is not. So as you can see, we're kind of inside this little range over here. So we had a strong push with the blue candlestick, then we had the babies over here not doing nothing, pretty much pressuring, trying to fight off, maybe run away, you know, play outside, so something like that. And the father comes through, instills discipline to the children, and we are going back towards where the initial trend was. Okay, now we have the three black crows or the three white soldiers. So apparently on an uptrend, if you see something like this and you see three bearish candlesticks, it indicates a lot of selling momentum and you should sell. Three white soldiers, the same thing, bearish pressure, and then three bullish candlesticks indicates a lot of, you know, buying pressure. So the next candlestick should actually be, you know, green. However, if we take a look at the charts, I see three black crows just over here. And what I've been doing, I've been trading the opposite of what the conventional method has been, you know, saying. And for some reason, it's been working really well. A while back, I read an article from Trading with Rainer, and he said how to trade the three black crows. Hint, you do the opposite. And it made me laugh, and I started doing it, and it actually works. So props to him for spotting it. He obviously does it for stocks, but it definitely works for Forex as well. So three crows over here, bearish. What do you wait for? How do you enter? You don't want to just enter if you see this huge bearish candlestick, because, you know, it could definitely just continue dropping down. What you want to do is wait for a candlestick confirmation. So maybe something like this, a nice bottom wick over here, you know, nice little shadow, and maybe an engulfing candlestick like this could be a nice little entry. So after three black crows, you trade the opposite, and as you can see, it would have been a nice trade towards the upside. So to conclude, this is a little bit weird. I'm not sure whether in the past this used to work and it used to trend towards the downside, but there is a lot of speculation that actually Once you see this kind of price action, you wait for a few more candlesticks as I just explained, and likely it could be a signal towards the upside. So I don't know, let me know in the comments what you think about this. I'm curious. Okay, so last but not least, we have the bullish and bearish engulfing candlesticks. These candlesticks are simply amazing, easy to remember, two candlestick formation. Traditionally, bullish engulfing candlestick is kind of effective on a downtrend, so it's trending down, you see a bullish engulfing candlestick, likely is telling you that the price will reverse. Vice versa with the bearish engulfing candlestick, if the price is increasing, you see this formation somewhere over here is gonna, you know, continue dropping down. That's the traditional way, but I trade these candlestick patterns as continuation, reversals, everything. So I love them. They're really profitable. The first time I applied them in my strategy, that's when I started making money in Forex. So a little example of how the bullish engulfing candlestick works. So it's trending towards the upside. We can see the nice trend. Bullish engulfing candlestick just off the trend. Likely is going to be a nice continuational push towards the upside. And as we can see, it goes towards the upside very, very nicely. Of course, it's simple, but for this to succeed, you have to find confluence with multiple time frame analysis, you know, some indicators, some price action, then you add everything together and then it works. And here's a quick bearish engulfing candlestick example. Look, nice little resistance off here. Bearish engulfing candlestick, two candlestick formation, broke out the previous area low. It's a great little trade just off here starting. So we enter. What happens? It drops down, so you could have already banked yourself some money. I simply cannot recommend engulfing candlesticks enough. Okay, so now let me show you how to use candlesticks properly and find some profitable trading setups. So I'm currently on GBP USD, the 4-hour time frame, and what do we see? This is a naked chart, and I do see a nice little trend moving towards the downside. So currently the main candlestick I see of interest is the bearish engulfing one, and since the overall market direction is currently towards the downside, we can consider selling this trade. Typically, people will tell you that you need your stop loss level just above the trend, but personally, I love using moving averages. And as you can see, I have 20 for the orange one, 50 for the blue one, and 200 for the green. They are simple moving averages, and they allow me to understand where I should place my stop loss. So just around here, about 80 pips, 81 pips in this case should do, and I can make my target profit around 2 to 1 risk reward. That's ideal because I can potentially make twice as much profit than I lose. So what's important when we are trading the downtrend in this case? Well, we want to typically ignore all of these candlesticks over here in the mid-range zone because they are not in a key level. The key level at the moment is the trend, right? So we want to wait for the trend bounce just over here. So 1, 2, 3 touches, 4 touches, and every single time it has a touch, typically it goes towards the downside, right? So we have a nice bearish engulfing candlestick as confirmation for our entry. It just recently bounced off our trend just over here. So let's just quickly see what happens, and it drops back down very, very nicely. Now, if we take a look at what actually happened after we entered this trade with the bearish engulfing candlestick, the market shot towards the downside, gave us a bullish engulfing candlestick, which tells us maybe there's going to be a pullback, and look what happened. Boom, it went towards the upside to retest the key level. So at the key level, that's where you want to be trading. You typically don't want to enter on a pullback like this, you know, because you're trading against the trend. So if you entered for a buy, you potentially could have banked yourself, you know, maybe 30 pips or so, which is decent, but it's risky. You want to trade with the overall market trend. So overall market trend currently is towards the downside. That's what you want to do. So going down at the moment, pulls back. You're waiting, you're looking what's gonna happen. You don't close off your trading position until all of the moving averages are crossed. So 20, 50, and 200 is not crossed in this case, and gives us another great indication that sellers are definitely in the market, because look at the wick. Gives us a nice upper shadow, bearish engulfing candlestick, swallows the previous left candlestick just over here, and it drops back down. And this gives us a great trading opportunity. One more time, to kind of enter of this area zone, and boom, we are making money. Now if we look what happened previously, we had this tweezer bottom over here, and it does indicate that there is gonna be, you know, some buying pressure, and look what happened. There was a pullback, so you could potentially anticipate these movements. Let's say you're riding the trend from here, so I entered the trade somewhere over here, the market pulls towards the downside, pulls back, goes towards the downside one more time. You close off once you see this, and you wait for another trading opportunity. I would say this one would have been a really good one as well, because it has a nice upper shadow, and although it's not a big one, there is a lot of bearish pressure, right? Because that's where the bearish body closed, and it's also bouncing off the 220 moving averages. As you can see, the yellow moving average is the 20. It's touched it and bounced off, and same thing happened to the 200. It never broke it. So boom, a nice breakout. This is a nice entry opportunity for you to kind of take this trade. Even though our drawn trend is over here, it doesn't matter, because if you follow the moving averages, which most traders and hedge funds and everything basing their systems on them, you know, it makes sense to follow them, right? So if there was a breakout on the 4-hour time frame, it's a substantial move towards the downside, and likely that's what will happen. So if we entered over here, that would have been a great trade towards the downside. Then we're waiting for a pullback, bearish engulfing candlestick, enter again, kind of push exhaustion, push scenarios. Look how the markets move. Push, exhaustion, back to where? To the previous area of sensitivity, right? Push again, makes a new low. Usually this means we need the retracement. The retracement happens back towards the 2 moving averages or the trend line. You still have the 50 over here to kind of save your butt, and continues dropping down, makes a new low one more time. And this is the way it moves. Push, exhaustion, push, push, exhaustion, push, exhaustion, right? Another thing you need to do to be profitable is having multiple time frame analysis. So we're currently on the 4-hour time frame. Let's check out maybe the 12-hour. And as we can see, this is the setup we have. So clearly a nice little downtrend over here. What's happening? Look, a strong upper shadow just over here signifies a lot of selling pressure. But why? Because there is that 20 moving average, right? 20 and 50. What else is important? There was a nice crossover. So 20 and 50 moving average. The 20 moving average, or the shorter period moving average, is crossed. The longer period also signifies, you know, bearish momentum as well. So what else is significant? This bearish engulfing candlestick, as since it's on the 12-hour time frame rather than the 4-hour time frame, it's also a much bigger confirmation, because the higher the time frame is, the more the candlestick price action matters. So now you can calculate where you should kind of take your profit. So we have the 200 moving average over here. It's below the candlesticks, which typically means it will react as a support. So after a candlestick touches, it might go up. So you need to be careful of that. So let's mark it just with the pen tool over here, and let's go to the daily time frame to see what's happening over here. Maybe there is a different price action. So the daily 200 moving average is really far away at the moment. We don't need to worry about it. Again, we are seeing nice upper shadow and a lot of selling pressure, right? 3 candlesticks over here that are bearish. Clear indication for solid bearish price action. It's also broken the 50 moving average. Now we know all of this indication, so we know that daily, 12-hour, 4-hour is trending towards the downside. So now we can come back to the 4-hour time frame and with confidence actually continue trading towards the downside. So let's just see what happens. Exactly, goes towards the downside, and now where the 12-hour moving average, as we saw, is just around here, you should expect some sort of pullback maybe. So let's see what actually happens with this trade. And as expected, because the 12-hour 200 moving average was over here, it kind of started pulling back towards the upside. It doesn't have to reach it, as long as it's around, you know, a centimeter apart. You should be expecting that maybe at some point there's gonna be a pullback. So that's the way I like to trade, you know, multiple time frame analysis with moving averages and candlestick patterns. Okay, now let's just take another example. Sometimes candlesticks will fail you, you know, it's not 100% guaranteed. There's nothing 100% guaranteed in Forex, crypto, or stocks. It's just probabilities, right? If you have a strong enough strategy, that's about 60% profitable, you will make money. So if you have a losing streak, don't get disappointed. Traders will lose trades. You have to understand that. And the sooner you understand that, the sooner you'll start making money. So as we can see, a nice trend over here, upper shadow, beautiful upper shadow, already telling you that there is a solid, an area zone over here. So I would say this is a nice little resistance that you can kind of mark. And what's important now, again, 20 and 50 moving averages have crossed. Bearish engulfing candlestick, although it has this kind of wick at the moment, it doesn't really matter. What's important is the crossover. 20 and 50 moving average has crossed, and the candlesticks are moving lower than the moving averages. Already a great trading opportunity. So let's see what happens. Okay, so it disrespected our trend line a little bit, but what you can do is just adjust it, because trend lines are adjustable, and as we can see, it makes sense one more time. And this is why I like having moving averages, because they bounce off in between the 20 and 50. As you can see, bearish engulfing candlestick went towards the downside a little bit. Bullish engulfing candlestick suggesting, that there is some bullish pressure. Boom, goes towards the upside. However, a nice candlestick formation over here, dodgy in the middle, suggesting that the market is indecisive, and because it's off the 50 moving average, likely sellers will come forward. And as we can see, the next 4 to 5 candlesticks are dropping down, and this would have been a beautiful trade one more time. As I said, I love trading bearish and bullish engulfing candlesticks. About 80% of my trades are because of a bearish or bullish engulfing candlesticks on a different time frame, and I kind of go off that to develop my full trading setup. And as we can see, goes towards the downside. Are we gonna reach take profit? And as we can see, it goes towards the upside. That's totally fine and reasonable as well, since, well, we could have potentially closed off over here that bullish engulfing. As we can see, there was a nice lower shadow already, suggesting that, hey man, maybe there's gonna be a lot of buyers over here. And if we just draw this area zone from this first wick, it never broke out, so it started to consolidate in between these two area zones. What's happening over here? You should start thinking about it as a trader and maybe close off somewhere around here for a nice potential, I don't know, 100 pip profit probably. And then after, a strong bullish engulfing candlestick come forward, actually breaks the 50 moving average. And if it does break the moving average, your trade is invalid. You probably should not be keeping the trade open unless there is some higher time frame price action that you think it might bounce off of. Now we can see the same thing can happen just over here. Look, if I just draw the trend, what's important? Which candlestick do you think is very, very interesting? Well, this one over here. Look at the upper shadow. Look at the body. Very small body. Nice upper shadow, suggesting there is a lot of buying pressure. What else is important? This previous area zone over here has now been broken. It made a new high, pulled back. Nice rejection over here. Beautiful trade. Maybe enter on this small little bullish engulfing candlestick, and boom, it goes up. And if you're more skeptical and maybe you had a resistance over here, you could have potentially entered on that big huge bullish engulfing candlestick off here. But then again, it could slightly be more risky because you're entering on a breakout. A solid breakout usually has a pullback, so maybe wait until you do develop this candlestick over here, bullish engulfing, breaks the resistance, right, and wait for that exhaustion. As you can see, the next candlestick wick over here did touch the previous area of resistance, and it becomes support. So this resistance zone over here that was many times respected became support zone, pulled back to this area zone, and this could have been your entry candlestick, and you could have banked yourself a big trade. Let's just see how many pips you could have potentially made. So around 94, 95 pips, and this could have been beautiful because you had this nice bullish engulfing candlestick kind of price action already, right? If you still don't know what I mean, I'm currently on the 4-hour time frame. What you can do is go to the lower time frame. So the first candlestick you saw was developed by these 4 candlesticks, right, from 10 a.m. to 2 p.m. and then we see nice little exhaustion just over here. We enter on completion of exhaustion, and then we are riding the wave up. So for accurate candlestick entries, you may want to use different time frames. So if I'm using 4-hour, 1 hour is great. Sometimes I even use the 15-minute time frame, combining chart patterns as well. We can even analyze this trade further, so you could potentially have a trend over here. Over here, it really depends on how you see it, but I believe this one probably makes more sense just because it's in between the 20 and 50 moving averages. So this is where we left off. Nice bullish engulfing candlesticks, right? Now coming back down. What's important over here? You need to have a look at the higher time frames, right? So let's take a look at the daily. Previous area of sensitivity was over here, so potentially you could have been aiming for this area zone. Since now we reached this area, right, we need to come back to the 4 hours to see what's going on. So now we have a new kind of top over here. As we can see, the wicks are telling us this is a strong area of resistance, so we need to wait for a breakout. There's a lot of selling pressure over here, right? So what can we expect? Well, of course, a pullback, right? So let's see what happens. It pulls back towards the 20 moving average, and look at this huge bullish engulfing candlestick. So potentially you could have maybe entered the trade early. So it broke out over here, bullish engulfing, break inside the 50. You could have potentially entered the trade just over here and rided this wave towards the upside, close the trade inside the resistance. Maybe not ride all of this because you don't know whether it's gonna kind of pull back again towards the downside. You want to wait for the breakout, right? Now, if everything is still confusing to you, don't worry, because there is a tool that will help you. If you head over to tradingview.com and type in the indicators section, all candlestick patterns, you will see magic. It will show you every single candlestick pattern there is, whether it's a bearish engulfing candlestick, whether there is a inverted hammer, whether it's a shooting star. Now, you may be overwhelmed by using this indicator because you will be looking at every single candlestick pattern there is, and that's the wrong way to do it. You cannot look at every single candlestick and think, you know, this is what's gonna happen next. As I previously mentioned, go off the moving averages, which is gonna show you the overall market direction. So if you're new, this is gonna be great for you. We can see the uptrend. We can see the 20 and 50 moving averages is telling you it's a bullish engulfing candlestick, right? You don't even need to learn them anymore. You can just see it's a bullish engulfing candlestick. Maybe you should buy because Evaldas just told you his own trading strategy that he makes loads of money off. So maybe you should do the same thing. Look, we have a Morobuzu white candlestick. What did I tell you about Morobuzu previously? It has no wick or very, very slight wick at the top. You could have potentially entered this trade and continue moving towards the upside. And as we can see, because a Morobuzu white candlestick is a continuation candlestick, and since we have the 20 and 50 moving averages over here, you don't need anything else. Now, as we can see, we also have trades like long upper shadow just over here. It's telling you that this is a long upper shadow. Some people would say it's a pin bar, hammer, many names for it, but as you can see, it did not react bearishly at the moment because you are trading against the trend. Never trade against the trend. Take the trades only with the trend and momentum. So at the moment, there's no trade to be taken because the train has already left. If you entered the trade somewhere over here, you could have potentially ridden this trade to huge profit. So let's say I entered over here, I'm not closing until it actually maybe breaks my 20 moving average by the minimum. I'm 363 pips in profit at the moment, and potentially it could skyrocket even more. I still heavily suggest you guys learn the candlestick price action because this is a indicator and sometimes it can be wrong, and in some situations I actually go against what it's saying because I know trading and I've been trading 10 years. And if you're interested in a more in-depth learning or my forex trading signals, I recommend you have a look at my description down below, and maybe you are interested to see how I trade the forex markets live, give you an overview on what I'm thinking currently. You can watch this video just over here with this small trading account.